What's going on, guys? Hamilton here with the Trading Initiative, and I am going to make a quick video on how we find stocks to trade. This video is going to be a quick introduction to our stock selection process. It starts with some macro analysis. We utilize a tool called Koyfin. It's free. There's paid versions as well. You're going to be looking at a paid version of what you can do. So feel free to sign up for a free account, koyfin.com, and you can kind of follow along. And when it makes sense, you can switch over to a paid version, right? First thing we're going to do is we're going to look for strength within U.S. sectors. Year to date here, we want to see which areas of the market are working the best and specifically which areas of the market are outperforming against SPY. It's been this way all year. It's been the offensive areas of the market, tech, communications, and consumer discretionary. Those are the three areas of the market we want to continue to press capital in. And so that's where we're going to be focused on during today's scanning portion, right? We're looking to find a stock to play. We want to be choosing from one of these three main sectors. Once again, it's tech, communications, and consumer discretionary. We're going to niche down into the U.S. industries portion. And we're going to look at different types of areas of the market within those sectors that are working the best. As of right now, semiconductors, an industry inside of tech, is absolutely blowing everything out of the water. Home builders, very surprising. Coming into this year, most people probably would not have expected home builders to be up, but they are. Second, leading, right? So then you have software names, you have internet names, and then right above SPY, finally, we have jets, airlines. Now, it's not necessarily just airlines. It's also hotels, resorts, and cruise lines. So kind of that leisure space. Those are the five major industries that are outperforming SPY. And so that's what we're going to focus on in today's session. We're only going to be scanning through those five industries. We want to find something either in semiconductors, home builders, software, internet, or that jets sort of area. And once again, ITB home builders are not necessarily going to be real estate. A lot of them are going to be in consumer discretionary, which we noticed during the U.S. sector portion here that we want to own, right? This is up 25.19% on year to date, and obviously up and over SPY, which is only 12.84. So we know where we want to be. Tech, communications, discretionary, and then from an industry standpoint, semiconductors, home builders, software, internet, or jets. Once again, hotel, leisure, etc. We're going to niche down one more time, and we're actually going to find the market cap of where is, the best idea to be parking our cash. Now, right now, the market's kind of transitioning. We're moving kind of away from some of the overperformance and large cap growth, and we're starting to get some pop up, at least in terms of relative strength, in terms of smalls and mids. And so we're constantly looking at that small and mid space right now within TTI. We not necessarily saying large cap growth is going to just die. It's not going to capitulate, but it could slow down and offer an opportunity for overperformance in those smalls and mids. So as we see here year to date, realistically, the best play for a majority of this year has been to park your cash in large cap growth. Against SPY, it's up 3.46, but we are starting to see a divergence here, right? We're starting to see that small and mid cap space pop back up, most notably small cap growth, IWO. So as we go through the next portion, the scanning portion, we want to keep a special consideration, right? An eye out for some of these small and mid cap names if they fit every other criteria, which is that offensive area of the market sector-wise, and then those five industries. So now we're going to look at Finviz, right? So we're actually going to take all of that information that we just went through, and we're going to plug it in here and find some sort of basket of stocks that we can actually trade, right? So first thing we're going to do is, if you're in TTI, you know this, we love trading breakouts. We want to find the names that are already starting to break out, generally speaking above horizontal levels. So this 50-day high requirement, a great place to start, right? Average volume, we're going to go over 1 million. That's just to make sure the trades are liquid, and also if you're trading options, click on optional and shortable. Having that average volume over 1 million will generally give you liquid options. It's not always there, but generally speaking, you're not going to get options chains that have nothing. So optionable and shortable, 50-day high, average volume over 1 million. And now let's actually go ahead and append one of these sectors, right? Let's go to consumer cyclical, which is that consumer discretionary space. So now we have a bunch of names here that are on the list that fall under that consumer discretionary / consumer cyclical umbrella. Now let's actually just go look at them. Let's find them. Is there a horizontal level breakout happening somewhere within this space? We know we want to own them, and it will be extra credit if they're a small or mid cap. So we're looking through here. Ford, potentially. This looks like it could potentially be a horizontal level break. So we're going to go ahead and pull this up. We were looking at a potential short sub 11, but it never got there, so we didn't take it. Now we're looking at Ford potentially to the upside. I don't absolutely love this. This looks more like a descending triangle break instead of a horizontal level. So I'm not interested in this. It's not the worst setup, but it's just not the setup that I'm looking for here, right? So we're going to keep going. If you've been trading, I know you've seen Carvana, but we're going to skip that because that is just so far overextended that it's not worth it. Actually, we'll go back to page 1 because I just saw one. CCL, right here. Horizontal level break, it looks like. CCL, and we already have it charted. So some of the guys inside of TTI actually opened this up last week. We just got a price upgrade here, pre-market. It's Monday, June 12th, and so you're going to see a little bit of a pop here. But this is exactly what we're looking for. This is part of that JETS industry, that consumer discretionary sector, and it's it's transitioning from a mid cap to a large cap here at 16 billion market cap. So this is right in the wheelhouse of what we want to own. This is a fantastic way to set yourself up for not only sector, industry, but market cap flow. This is how stock selection works. It's not just find a chart that has your pattern. Back end it. Find everything that could potentially be supporting that potential breakout and then buy the strongest names, okay? So as of right now, I'll run through this really quick with you guys. 4.49 ADR. This means that on any given day, on average, from peak to trough, this thing will move 4.5%. That's good. We love to see a majority of the volume in our VRVP indicator here during the accumulation phase, the little stage 1 accumulation phase. We like to see it and then break above that horizontal level at $12.50. Very low volume. We love to attack these areas right here because there's very little volume on the way down. We expect very little volume on the way up, which means not as much resistance. We see that there's good volume on the day. RSI is above 50. This is a great trade. You have sector strength, you have industry strength, you have market cap strength, and all of the the switches that we have to actually have on the chart to trade it are there. There's only one last thing we need to see, and that's, does it have something on the chain that we can trade? Right now, we are targeting that $16 to $17 area based off of the 1.618 fib and taking the entry off of the 12.5 entry with the stop somewhere around 11. We could actually probably tighten this up. So really quick for the guys that are trading shares, if we pull this, let's say our stop is somewhere around here because we're already breaking out, right? We don't want to be trading it if it's all the way back down at 11 anyway. We could cut that short. This is going to be around a 3-to-1 risk to reward, which it is, right? It's a 3.15-ish risk to reward, meaning for every $1 you're risking, you are looking to make $3. Fantastic opportunity for the equities guys. If we pull up the actual chain, I already have it up. Let's look. We want the Septembers right now, guys. It's June. Within TTI, we're looking to hold these things from anywhere between 45 and 120 plus days out. September is our sweet spot right now. We have an IV rank of 3.7 with an IV of 57.3, meaning we can buy straight calls on this and we don't have to worry about IV crush as long as it's not too expensive. And like I said, we were targeting that $16 to $17 area. Boom. Right here, we got the $16 calls with a 0.32 delta. You can grab them right now for $47. This is exactly what I'm talking about. We have the back end to support this, right? We have the macro idea, the sector, industry, market cap. We have the actual chart, right? We have the horizontal level with all the requirements, and now we have the chain. This is a fantastic opportunity to get long, a consumer discretionary name, a JETS name that is breaking out into a potential stage 2. Cheap plays. You can buy straight calls, obviously. You know, this has a really good thesis underlying it, and we like this trade. Like I said, there are some guys inside the group that already have this trade in towards the earnings here, so good job. Anyway, this is a complete breakdown, right? A complete breakdown of our stock selection process, something that you can utilize. Take each of these working pieces, make them work for yourself. I guarantee you will be finding yourself in front of grand slams a lot more often when you have that macro back end to back up what you're doing on the charts, right? The sector, industry, market cap strength as well. Guys, if you like this type of content, please like and subscribe. Comment below what you would like to see. It really helps. And if you're looking to bring in $10,000 a month or more with your trading account. We don't day trade. All we do is swing trade. If you're a busy trader looking to add that type of income, click on the link below and I will show you how we can do it inside of TTI. I'll catch you in the next video.